So this is a very critical test for the TRON/US dollar pair. So first off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So we got TRX/USD, that's the ticker. I did an analysis back in January, so the 24th of January 2021. Then I became bullish on TRON. So yeah, let's load this website. Decentralize the web. So here you can see, some chart, the TRON ecosystem. So there's quite a few projects here. You can see the list here. TronScan, first ever Tron-based blockchain explorer that provides comprehensive on-chain data for queries and supports token creation. DApps. I mean, this is it's very broad, and that is what we need. We need to have that full spectrum dominance. That is how you can create something that has actually a revolutionary potential. Okay. Boasting over 46 million accounts and 2.1 billion transactions, TRON is the world's fastest growing public chain. Okay, so here is the chart, data from Binance. The 24th of January is the last time I did an analysis, so let's see what happened. So here is the 24th of January, and we did see, a very substantial rally. But we did see a major bear market for TRON as well. And the reason why TRON is interesting right now is because of the green 50-week moving average. So here we test it surgically and get rejected. So obviously it's a moving average that matters. Here we do try to pick above, then we fall, we retest with this candlestick, as you can see, and we are rejected. So basically this is a moving average that really matters. Here again we try, and almost surgically we are rejected, and the bears get a bit aggressive. Hence, this is one to watch. Here we go down and test, and we are now, this week, we are sleeping on that moving average. So it's a really big deal. We do certainly want this moving average to hold. Because we have seen a very substantial pullback already. If we do lose it, then there's, we could go down to some horizontal support levels, even potentially the blue 100-week moving average. But we do not want that to happen, so the bulls, they really need to start buying, because this is like the key level at the moment. From a perspective of RSI, we haven't been this oversold. Well, we are not technically oversold, but given the history of the RSI for TRON, in that sense, we are at a very low level that we haven't seen since early 2020. So the bears have been absolutely ferocious. When we go here to the daily data points, we do have some interesting time cycles that have been relatively reliable. Rise, decline, rise, decline, rise, decline, almost, a bit surgically. I mean, this, it's worked pretty well for bullish and bearish signals. Given that we are currently part of a new rising phase, you could further argue that we recently formed, potentially, a bit of a double bottom. It still is obviously very early, to make that call, but you can't, when you get, technical signals, you can't wait too long either, because if you wait until you have all kinds of corroborating evidence, then you might have missed a move. So that's like the paradox of technicals. When you get a signal, you need to kind of act. So yeah, it's a bit of it's a tantalizing situation, because we do have the long-term moving average support, we do have a double bottom, we do have a rising phase here. It's interesting. I gotta say, there's something about this move. When we did go down here, we reached a very low RSI level on the daily data points. We did get oversold. It is rare for us, when you look, historically at, TRON, it is very rare to become deeply oversold. We usually see at least some mean reversion. So there's that. Looking also at the PPO, which measures the distance between price and the red 200-day moving average. We are at a low level. So it is tantalizing. When we go to the seasonality, we kind of only have 4 years of data. The data for July is not good, but the data for August is slightly better, but still, I mean, it is certainly bearish. September is definitively bearish. We close lower 100% of the time, which is, beneficial for the bears, but for the bulls, it is a bit of a headache. So yeah. But yeah, at this point, I think that from a more shorter term perspective, I would lean bullish, but it is very contingent on this double bottom holding and the green 50-week moving average continuing to offer support. If the bulls are not able to rally here, then yeah, we have problems. Because it's not like, these cryptos are at, all-time highs. We have seen a very substantial correction. And when we look here at Bitcoin, which is, the king, it is dangerous because we do have that head and shoulders pattern. We have the green 50-week moving average here as well. And, if we zoom in a bit, we are seeing that currently it is becoming a resistance level. That's not good. If you look here at the light blue 5-week moving average, it has become a clear resistance level. So the bulls are not there yet. We do still try to maintain to stay above 30,000 here on Bitcoin, which is a very, very important level. And if we were to lose that level, then yeah, we could go way down. So yeah, this is a very critical time here for the cryptocurrencies. Let's look at the Ethereum like that. Let's look at the index. Yeah, I mean, we are just kind of from a weekly data points perspective, we are kind of in no man's land. We, as far as the moving averages go, so we have a bunch of resistance above us. We don't have support until we go way down here, to the green 50-week moving average. We could argue that we have some horizontal support here, like we do still have, some horizontal support for Bitcoin. So there's that. Now looking at, the daily data points, we have fallen below the red 200-day moving average. And when you look here at, the green 50-day moving average, it looks a lot like we are going to get, that death cross pretty soon. As far as, the golden cross and the death cross, it's very important to sort of, it goes back to what I said earlier, that when it comes to technicals, you sort of need to be a bit early, because we have already seen here from this high to the current level, a minus 55% pullback. So let's say that you waited, you prefer to wait until you get the death cross to turn bearish, then you sort of are a bit late to that party. And you can have similar situations with the golden cross, with the 50-day crossing above the 200-day moving average. When that move eventually does happen, you get that bullish signals. You might have already missed out on like a 70% move. So yeah, it's all about being early. The early bird does get the worm.